Oh, yeah. This is one of those earnings we were waiting for, baby. FedEx is up a solid 8% after hours. I'm recording this, obviously, the night after, so we'll see what that looks like as far as the morning and how that translates into tomorrow. But good movement after hours, no doubt. We're going to dig into this earnings report and take a look at what this company did. First off, I want to say, holy crap. This is an absolute smasher of an earnings report. Smasher. So I understand the price movement for sure. If you just look at these numbers, non-GAAP EPS of $4.87 beats by $2.15, and GAAP EPS of $4.72 also beats by $2.15. That is an incredible profitability beat. They were expected to decrease profitability quite a bit, obviously, with all the precautions that they've had to take as far as safety, sanitation, but very good quarter. From a revenue perspective too, what a shocker, all this online shopping, it's helped them quite a bit. It's not a shocker to me at all. They've increased 13.5% year over year. I expected a 10% increase personally in terms of revenue, but they beat it even further, beat by $1.74 billion. That's an incredible numbers. Incredible numbers. Adjusted operating margin of 8.5 versus a consensus of 5.4. That's where the profitability comes in. Beautiful stuff. Fiscal year 21 capital spending is expected to be up $200 million, driven by additional capital or capacity initiatives to support increased volume levels. Makes sense. A lot more product flowing in and out with FedEx. They're doing a lot more deliveries. They need more people. I get it. So revenue obviously tops as we saw. FedEx expects the capital as we saw there, but overall they have continue to not necessarily give a proper guidance for the full year as far as actual revenue numbers, and that's for many reasons, because it's hard to tell necessarily how long the online shopping demand will last, if this is a permanent thing or if it's going to be a temporary and then it shifts more back to in-person as well. Who knows what that looks like and when that looks like, so I get why they don't. I'm just slightly shocked that the stock remained up even though they didn't provide guidance, because typically to see a stock jump up 8%, especially one at the valuation where FedEx is at right now, it's hard to see them remain at such a positive number after hours when you don't see guidance on it either. Typically they have to beat on all three, but they didn't here, and surprisingly the stock's still up. So definitely good numbers. We'll look at their press release now as well. As we love to do. Press release, baby. And obviously from a year-over-year perspective, $19.3 billion versus $17 billion last year. Good numbers there. Operating income increased actually massively year-over-year, $1.59 billion. We're looking at the GAAP numbers. Obviously there's $0.98 billion. I mean, that's more than $500 million in increase there. Operating margin increased. Net income increased by $500 million. Beautiful numbers there. And EPS, my gosh, rose by $2 a share. Very good EPS numbers. Very, very nice stuff. I mean, it's just, I don't know. I think that is just what I would call incredible. Obviously, they give a lot of garbage here, but strictly from a CEO, which we like to see, our earnings growth underscores the importance of our business initiatives and investments over the last several years, and in many ways, the world has accelerated to meet our strategies. That's what he says. Good for him. I would like to thank our team members whose efforts during the time have helped keep the world's healthcare, industrial, and at-home supply chains moving despite the challenges of the global pandemic. Look at him. So nice. Your workers did it all for you, baby. Let's go. Yeah, really nice. Obviously, we saw that there was no guidance either. One thing I'm missing though on this, I mean, obviously a lot of text, which not massively important in my opinion. None of this is super special, but we didn't get a balance sheet on this report, unfortunately, so I have to go and look at the most recent earnings report or balance sheet I can get, which is posted on Yahoo Finance. So accuracy might not be 100%, let's be fair. But year over year, you can see a difference here, obviously. Growing balance sheet. Total assets, $73.5 billion. Holy freaking crap, that's a spicy balance sheet. So much money. Total assets versus last year, they had $54 billion, but liabilities also grew quite a bit as well. 55.2 grew from 36.6. So overall, you did see stockholder equity rise 18.2 versus 17.7. So stockholder equity did rise, and that's good numbers to see. You love to see those numbers. You really do, in my opinion. As far as the stock's price, obviously, it's not one that I love at these values. I mean, you can look obviously to see what's happened this year alone. I mean, it's shot up incredibly to the highs back in 2018, and I much preferred in the 2019 levels. Under 200 makes a lot more sense for me in this stock because the P/E ratio gets a little bit high towards the 50 range, and I just don't like it as far as the value that it provides as much. But I could understand an investment still at these levels because it's probably going to be a consistent one for you. You can't expect massive growth out of it, but it can be a consistent play with a dividend. Not one I'm looking to add a position on, but if you are, go for it. I hope you enjoyed.